kindly by Mr. Mahendran, the country head from Karur Vysya Bank. To begin this series of talks, we have Mr. Harshal Barot from Metals Focus to speak on changing dynamics of the Indian jewellery market. Sir has more than a decade's experience as a precious metals analyst. He is jointly responsible for Metal Focus research on India, elsewhere in South Asia and parts of the Middle East. He is also a regular contributor to Metal Focus work on price forecast and macroeconomics. Sir, can we have you on stage, please?
Thank you. Okay, good evening, guys. We are nearing the end of the day. I hope I managed to keep you guys awake until the end. So the topic is changing dynamics of the Indian jewelry market, and some aspects of it I think yesterday Mr. Sivakumar also touched upon, but I'm going to sort of expand on some of the trends that we see because as Metals Focus, for those I think most in the audience are already aware, we have an extensive research program, and we travel across the world, across India to understand trends in the Indian gold, silver, platinum, palladium, all precious metals markets. So speaking of the jewelry market, essentially what we've seen over the years is that India's jewelry demand has more or less been stable around 600 to 700 tons annually. So while it's been stable in volume terms, the fact that it is still growing at CAGR of 10% in value terms, I think it speaks for itself that even though sort of gold prices are increasing, despite that our consumption is remaining stable. So in a sense, more money out of the pocket of consumers is still sort of going into gold, and the gold price performance itself is I think no surprise for anyone. At a CAGR of 12% since 2015. The price have continued increasing, and over the years that we've been traveled, some of the interesting trends that we've noticed over the last few years is I'll touch upon this in two parts. One is at the trade level what is happening, and one at the consumer level in terms of how the consumers are responding to the high prices, and given the challenges for margins and the competition that the jewelry industry is going through, how that is impacting the jewelry landscape in particular. So some of the data points are very widely quoted across media. The research has been done by Metals Focus. So at the end of 2023, the share of organized market is 37% according to us, and what we've seen interestingly is that standalone jewelers have been suffering the most, because medium sized jewelers, in a way, a lot of cities, they are able to catch up now, increasingly able to compete with some of the larger chains as well. So even during the forecast that we do for 2020-30, we think the organized market will increase to 45%, followed by medium sized chains. So just for clarity, the national and regional chains, what we define as anybody who has more than 25 stores is basically part of that, and then standalone are basically guys who have less than 5 stores, and the medium size are anywhere between 5 to 20 stores are the medium sized jewelers that we take into consideration. So at the trade level, this is what is happening is that and interestingly, over the last few years, with more equity funding coming in, a lot of the jewelers have got listed. There's more interest from financial institutions. So what basically this has done is has led to an aggressive sort of expansion by these chains. We keep hearing about they adding 50 stores a year, 100 stores a year, and we think this is still sort of a tip of the iceberg in a sense, because if you compare this to China, for example, where some of the large chains have stores running into thousands of stores, India, Tanishq is still less than 500 stores. So still a long way to go, and I think with this fresh infusion of investor money, I think we at least see this trend continuing until 2030. And in terms of at the consumer level, what is happening is with the gold price increasing, obviously it has led to sort of pressures on consumer purchases, in a sense is that they are within their limited budget, they are able to afford lesser amount of gold, and the way sort of the trade is compensating to it is by promoting more 18 karat, 14 karat products, so that the outright hit to the consumer pocket is minimized. But from a trade perspective, this is also being driven by margins in a sense, because the 22 karat category per se in India has become very, very competitive. I think anybody who has gone to shows has seen that if you look at plain gold jewelry, the margins are anywhere between just 5 to 10%, while if you see studded jewelry, the margins can range from anywhere between 15 to 40%. So a lot of the push for this kind of jewelry has come from the trade itself, but at the same time we have a young population, and the consumer preference, in a sense, the way they dress is no more exactly traditional with more western sort of attire. Some of the 18K and 14K designs are sort of increasingly becoming popular, and this is just sort of an overview, a study which we did as part of the India market report for the World Gold Council, where we did this kind of breakup, is that South still the most dominant sort of market for gold, again largely 22 carat. So for the East, West and North have typically seen more 18, 14 even traditionally, but even there it is increasing. And interestingly, in South, I think over the last 2 or 3 years when I have been visiting South, a lot of the retail guys, they have now entire sections for diamond jewelry, entire floors for diamond jewelry, which sort of 10 years ago you wouldn't find at all. So even in the South, there is increasing acceptance of diamonds. Part of it is, of course, got to do with the younger population as well, and part of it is because of the branding by the trade itself and the push or the sort of struggle for margins, which is why they tend to promote more of studded products in general, which includes polki, kundan and those designs as well. And as I said, with the increasingly young population, what we are going to see over the next few years is that this trend of more studded or more lighter weight designs is going to gain prominence, and this is an experience that even China went through. For a period, there was a lot of lightweighting that happened in China. You had lower caratage products that became popular in China, but over the last 2-3 years, especially after COVID, you've seen even 24 carat category becoming very popular in China. So China is again shifting back to higher purities because people see jewelry as more of quasi investment. So that trend, after a particular point, we also expect India it will change, but over the next few years at least, I think 18 and 14 carat jewelry will continue to gain sort of more market share. And interestingly, what I've seen is that even though I say that the organized market is going to gain market share, but even in smaller cities now that I go, I've seen the independents now sort of standing up to the competition in a sense. A lot of the single store guys, they have the store experience or the format which is very similar to the likes of Tanishq or Malabars. So they are able to sort of offer the same kind of experience with hallmarking coming in, even the sort of standards of purity, the levels of exchange or what are the terms that they provide. I think they are able to sort of compete, and a lot of them have been expanding as well into their own cities, adding more stores. So it's not that Indian market, of course it will become more and more organized, but I think the standalone retailers increasingly have figured out a way to compete, especially in the bridal segment, because the daily wear segment is a place where they think they cannot compete because they cannot keep or afford that kind of inventory levels that a daily wear sort of market requires. You require huge amount of inventory to show to your consumers, but on the bridal side, where some of the large retailers are also struggling, is where sort of standalone jewelers are now able to compete. So I think that's the gist of what I wanted to present, but there's time and I would appreciate if anybody has questions. I mean, World Gold Council, I think they'll be bored of this already.